we're going to look at the biggest headaches you will face when buying a house, and I'll teach you how you can overcome these problems, clearing the pathway to the keys to your home. Home ownership hacks. Ditch the deposit dread. Proving your deposit when buying a house can turn into one of the biggest headaches during a mortgage application, with the most common problem being deposit shortfalls. So let's say your deposit is £10,000 and you've only been able to prove £9,000 because your latest bank statement, which shows your final deposit, or maybe someone's gifted you the remaining money, but your bank statement has not yet been produced because you've not reached that day of the month. Banks like Nationwide can't produce proper bank statements with your name, address and account details on them until the day of the month your statement is produced. So make sure you carry out all of your savings and all of your deposits into bank accounts before you apply for a mortgage, therefore ditching the deposit dread. How to escape overlapping mortgage and rent payments without losing sleep. So you're in a position where you need to complete on your house purchase within the next month or so, and then at the last minute you realise you've got to hand in 2 months' notice to your landlord, therefore meaning a month where you have to pay your mortgage and rent, leading to an overlapping mortgage and rent payment. Sometimes your rental tenancy might not allow you to hand in your notice until you've been there for 12 months. The contract may require you to be at the property for at least 4 months before you can hand in your 2-month notice. So be sure to double check your tenancy agreement from the outset, and bear in mind the average house buying process takes around 3 months start to finish. So you need to be able to time handing your notice in at the correct point. If you're in a position where you risk losing your house purchase because the sellers cannot wait until the end of the notice, you can request the landlord put the property on the market, and if they find a suitable tenant before your notice period ends, this should help overcome the problem. Halt the headaches. House buying without bank statement baloney. Screenshots don't cut it, mini statements don't cut it, and stamped printouts will not be accepted as suitable bank statements. Make sure that all of your bank statement preferences are set to produce monthly and online bank account statements. There's nothing worse than needing to provide bank statements but not being able to access them, especially if you've got them producing statements on an annual basis. Bank statements must include your full name, your full address, and your account details, including your account number and sort code. That's your full account number, and be on the bank's headed paper. Get those preferences updated now. House hunting hacks. Outsmarting over valuations. So you see a property online for £450,000 and it states offers over £450,000. Unbeknown to estate agents, they are creating down valuation dread. I'm seeing more and more mortgage lenders are now looking for the property you're buying online, and if you had to pay £460,000 for a property on the market for £450,000, either because it's offers over or you've had to outbid someone else, therefore offering over the asking price, there is a very big chance the property is going to be downvalued. Now, you may find the seller, also known as the vendor, wants you to try a different mortgage lender to see if the same happens. Now, let me run a quick case study past you. A client of mine wanted to buy a property on the market for £230,000, and he loved the property that much he was prepared to go to £240,000 as a maximum. However, someone else bid £241,000. My client didn't want to go any higher. I ran the idea past him of offering £242,000, and the likelihood was that the property would be downvalued, therefore giving him an opportunity to renegotiate the price and beat all of the other bidders. Lo and behold, the property was valued at £230,000, and after a conversation I had with my client's estate agent clarifying that this is likely to happen again with most mortgage lenders now, or at least a lot of them, the sale was re-agreed at £230,000 because the vendor didn't want to waste any more time, and my client got his dream house, outsmarting the overvaluation. Is this mortgage mistake costing you your dream home? Applying for a mortgage with either a limited employment history, or maybe you've just switched from a contractor to self-employed, or an agency worker to employed. Maybe you've just switched industries you work in. For me, the blueprint for mortgage success starts with your employment history. Yes, there are mortgage lenders that will take your application after 1 day or 1 month's worth of employment history, but your application is going to come under huge scrutiny. If you can get 12 months worth of continuous employment history in the same industry, you're going to improve your chances of mortgage success hugely, as this area carries the most weight in your mortgage application. This rule can be applied across the board. So maybe you've got 2 jobs, maybe you're employed and self-employed, maybe you travel long distances to get to work. If you can show a 12-month track record of whatever it is, whichever may be your complication to do with your employment, you're going to be able to prove to the mortgage lender that what you're doing is sustainable. Bonus tip, if you are looking to relocate, which means your travelling time would be over 2 hours one way, the mortgage lender is going to have concerns. You may think you'll move and then get a new job in the local area. However, it's a catch-22 because you're going to have that travel time until you find a new employment position. Ensure you can obtain some type of clarification from your employer that you can either work from home moving forwards or you can be relocated more locally. If this isn't possible, then I would consider getting the new job first, doing the long travel journeys from where you are now to your new role, and then apply for the mortgage. Because when the mortgage lender sees the property is near where you're currently working, it's going to improve your situation, not make it more difficult. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. So thanks for watching today's video. Please check out the show notes for a recap with access to any links discussed today. And if you feel like you're getting value, please do consider subscribing and ringing the bell to receive notifications so we can carry on providing you with value. Have a beautiful day. I'll see you in the next one.